Hey guys, what's going on? What is going on? Street Trading here with our weekly trade recap video. We are looking at a 15-minute chart of SPY, and the boys breached all-time highs yet again into the close. Obviously, they, they've been playing with that level, and finally took out that 400 into the close, and just literally wrapped up the trading week as bullish as possible. As you can see, they've been pushing up all month, right? So the month of March, well, actually, we're at the beginning of April now, but whole month of March, they printed that low, brought it down to the demand of the beginning of February, and literally just has been squeezing shorts left and right. Obviously, a little bit of a brief pullback towards the end of the month of March, and then you have that nice rip up. And it's continuation, right? So, you can't say that April isn't kicked off solidly. Obviously, with the short 4-day week because of Good Friday, markets closed. They definitely printed a solid run for the bulls. So, at the end of the day, guys, it is what it is. Whether you are biased to the upside or to the downside, there's no denying what's happening right now in the markets, what's been happening. I mean, there's just, there's positivity across the board. Obviously, there's always isolated opportunities to the downside in this particular market that we're seeing right now, and there always is every single session, right? So don't get it twisted. It all depends on what you trade, how you trade, and your time frame, what you look at specifically. But the overall benchmark, the overall sentiment is bullish. There's no denying, clearly. So moving forward, now that the boys cracked that 400, are we going to continue? Perhaps, sure. Again, until there is a crystal clear character change, which we've had a few of them along the way, but they're still defending, right? The bulls are still defending key levels, and this is what you got to take into consideration. So again, you do not need the overall market to be on your side. If, okay, for example, we're obviously pushing higher, you don't need the market to be selling off for your individual security to sell off. Okay, let's repeat that again. You don't need the overall market sentiment to be the same as your individual security that's selling off. So it just helps. Obviously, it gives a little more, fire, right? But it's not a requirement. That's all. Just keep that in mind, guys. All right, keep that in mind. That being said, you want to have a number of tools in your toolbox to be able to utilize when things are lined up in a particular direction. Then you take advantage of it. Otherwise, don't fight it. Right? Don't fight the trend. Don't fight the trend. But more importantly, cash is a position. This business should be called waiting, not trading. It takes a lot of discipline to sit in front of your screen for X amount of time in a session and not do a damn thing, right? But obviously check the markets, study the price action, but you're not actually putting capital to work. It takes a lot of discipline to do that, guys, right? It's about, the analogy with baseball, for example, right? You got to wait for your pitch. Wait for your pitch. Your pitch is whatever, low and inside. Until you get a low and inside pitch, you don't swing, all right? You don't swing. This is the advantage of being a trader for yourself. You don't have a boss, right? You don't have a boss telling you got to build into a position. This is the advantage of being an independent trader, like most of you are. You can wait. You can wait for the perfect pitch, and when the perfect pitch, aka when the perfect setup comes up across your screens, then you take advantage of that. Then you swing for the fences. Okay, you may have base hit, great, but it's a high probability that you're going to get on base, right? A lot of baseball analogy here. We like baseball, so that's why we use it. So, point is, be patient. Wait. Stay in cash. There's no need to swing at every pitch. There's no need to trade every stock that comes across, you know, your screens, or if you have a watch list of 5, 6, 10, whatever it is, 2. If either of those securities are setting up to do what you want them to do, then you don't put on a position. You sit in all cash, right? Unless probabilities are far in your favor, you sit in all cash. Wait, guys. Wait for your pitch. Less is more. Less is more. The longer you go in your career, the more you're going to understand what that means. Less is more. Okay? Less is more. All right, guys, let's get into what we're looking at for the week. We're really talking about levels this week. All right, in this recap, we're talking about levels and how levels act as magnets, right? And that's pretty much what the premise of this video is going to be about, is levels. 9 times out of 10, guys, you just need to wait for the dust to settle. The levels, not the obvious ones, of course, but levels that act as previous levels of rejection, pivots, a high probability they're going to repeat its behavior. Now, probabilities. All about probabilities. And this is what we talk about day in and day out. This is how we trade, guys. All right, it's about everybody should be trading. It's all about probabilities, not certainties. You have to be certain in your decision, 100% certain in your decision that everything is lining up and you take the trade because you're certain that everything checked off your boxes, but you're not certain of the outcome. That's the big difference there, guys. Don't get it twisted. Anyway, let's talk about the levels we wanted to discuss here. Some trades we took, some trades we didn't take, some trades we got stopped out on, things like that. All right, guys, let's get down to some business here.